Hi and welcome to Crypto Bible News. In today's news, we'll look at the following stories. Binance holds multiple crypto services to Singapore users. Cryptocurrency exchanges scramble to drop Chinese users after Beijing's ban. And finally, a hamster outperforming the S&P 500 trading cryptocurrencies in a cage rigged since June. Now, before we get into the news, please don't forget to hit the like button and subscribe and hit notifications. Binance has announced a discontinuation of multiple crypto services for its Singapore users. The news follows a string of regulatory controversies in Singapore and around the world. Binance customers in Singapore will no longer be able to access a number of services on Binance.com as of October 26, 2021. These services include fiat deposit services, spot trading of cryptocurrencies, and the purchase of cryptocurrencies through fiat channels and liquid swaps. We will be restricting Singapore users in respect of the regulated payment services in line with our commitment to compliance, Binance says in the statement. The Binance team also advised Singapore users to cease all related trades, withdraw fiat assets, and redeem tokens on October the 26th by 4 a.m. UTC to avoid potential trading disputes. The announcement comes amidst regulatory controversy for the exchange in Singapore. The crypto exchange has suffered a string of regulatory controversies in recent months, including in Singapore. In August, Singapore's financial services regulator, the Monetary Authority of Singapore, MAS, said Binance's Singapore-registered entity, Binance Asia Services, was not yet licensed in the jurisdiction. The firm was temporarily exempt from needing a license under the Payment Services Act due to a transitional period when the regulator retroactively reviewed the company's application for a license. At the time, the MAS did not strike an optimistic tone. We're aware of the actions taken by other regulatory authorities against the crypto exchange and will follow up as appropriate with the applicant. 1 month later, the MAS placed Binance on an investor alert list, signalling yet again that the crypto exchange does not have a license to operate in the country. Elsewhere, Binance has raised the eye of regulators in the UK. The Cayman Islands, Italy, Holland, South Africa, Malaysia, Japan, amongst a host of others. However, Singapore hits close to home, as it's where the firm's CEO, Changpeng Zhao, lives. Let us know your thoughts and comments regarding this ongoing issue. Cryptocurrency exchanges scramble to drop Chinese users after Beijing's ban. Beijing's new blanket ban on all cryptocurrency trading and mining, the broadest yet by a major economy, has sent crypto exchanges and service providers scrambling to sever business ties with mainland Chinese clients. Shares in a range of Chinese crypto-related firms plunged on the ban, which closes off loopholes left in previous regulatory crackdowns on the sector. Industry executives noted, however, that many companies had already shifted key positions and key portions of their businesses outside China. 10 powerful Chinese government bodies said in a joint statement on Friday that overseas exchanges were barred from providing services to mainland investors via the internet, a previously grey area, and vowed jointly to root out illegal cryptocurrency activities. In response, Huobi Global and Binance, two of the largest exchanges globally and popular with Chinese users, stopped registrations of new accounts with mainland customers. Huobi also said it would clean up existing ones by the end of the year. On the very day we saw the notice, we started to take corrective measures, Du Jun, Huobi Group co-founder, said in a statement to Reuters. Du did not give an estimate of how many of its users would be affected, saying only that Huobi had embarked on a global expansion strategy many years ago and seen steady growth in Southeast Asia and Europe. Token Pocket, a popular service provider of crypto wallets, also said in a notice to its clients that it would terminate services to mainland Chinese clients that risk volatile Chinese policies and would actively embrace regulation. Some of the world's biggest crypto exchanges originated in China, but Chinese authorities have come to see cryptocurrencies as a speculative instrument, lacking in intrinsic value, prone to acute price moves, and a means to circumvent capital controls. Chinese authorities have instead thrown their weight behind the development of an official digital currency. The ban, which comes amid a swath of regulatory actions that have hit a range of sectors from gaming to tech to for-profit tutoring, makes it very hard for Chinese mainland investors to buy or sell the assets unless they leave the country. It does not, however, go so far as to declare ownership of cryptocurrencies as illegal. In contrast, whilst elsewhere in the world of cryptocurrency firms are facing increased oversight, outright bans are rare. I don't believe China's approach will set a standard for how other countries approach regulating this space, said John Wu, president of Ava Labs, a blockchain company. Many Chinese crypto exchanges shut down or moved ashore in 2017 after China, once the world's biggest Bitcoin trading and mining center, banned such platforms from converting legal tender into cryptocurrencies, and vice versa. Amid the crackdown, other types of Chinese cryptocurrencies have been moving out of China over the past few months, said Flex Yang, founder and CEO of Babel Finance, adding that the impact from the latest policy would be limited. The Chinese crypto financial services provider this month opened new business headquarters in Singapore. Kobo, a crypto asset management and custodian platform, also removed its headquarters from Beijing to Singapore. A hamster has been trading cryptocurrencies in a cage rigged to automatically buy and sell tokens since June and is currently outperforming the S&P 500. A hamster named Mr. Gox has been trading cryptocurrencies in a rigged box since June. The hamster determines which crypto to buy or sell by running on a wheel and strolling through one of two tunnels. Since it started trading on June the 12th, Gox's crypto portfolio returned 24% as of this Friday. A random walk down Wall Street author Burton McKill's belief that a blindfolded monkey throwing darts at a stock ticker list in the newspaper could do just as good as a human investment professional. The live-streamed hamster named Mr. Gox has been independently trading a portfolio of various cryptocurrencies since June the 12th. So far, his performance has been impressive. As of Friday, the portfolio was up nearly 24%, according to the @MrGox Twitter feed that documents daily performance, alongside of every trade made by the hamster. Mr. Gox performance outpaces Bitcoin and the S&P 500 over the same period. Mr. Gox's caretaker built the Gox Box, a crypto-rigged office attached to its larger home that gives the hamster the ability to perform various exercises that execute specific cryptocurrency trades. The hamster can enter its office whenever it wants to make trades. First, Gox runs on the intention wheel to pick out which of 30 cryptocurrencies to trade. Once the crypto has been chosen, the hamster runs through one or two decision tunnels. They then trigger a buy or sell trade of the chosen cryptocurrency. The top cryptocurrencies currently held by the hamster include Tron, Ripple's XRP, Cardano's ADA, and Ether. Gox's portfolio was funded with the euro equivalent of $390. Mr. Gox, unidentified caretaker and business partner, told Protos that the trades the hamster makes are automatically set to €20 increments. There are plans to give Mr. Gox more control and let him intentionally pick and buy his amount if the interest in his channel keeps growing. The business partner told Protos Mr. Gox has so far generated profits of €77 as of Friday afternoon. Its portfolio hit a high of nearly $580 in mid-September, and its performance was up nearly 50% in the last 3 months, according to performance data compiled by Protos. But since then, the recent crypto sell-off put a dent in the hamster's profits. But a profit is a profit, and Mr. Gox likely understands that Mr. Gox is happy to see some of his investments finally pay off. Thank you for watching the Crypto Bible News. Please tune in tomorrow, hit the subscribe buttons and notifications and likes.